89%. That's the share of Cognition's own code now written by Devin, their autonomous AI software engineer. Not a demo, not a pilot, production code, shipped, at scale, and the company just raised over $1 billion on the back of it. Here's the thing that should keep you up at night, or make you very, very rich, depending on which side of this you land on. Two separate companies are racing to own the way all software gets written. And by the end of this video, I'm going to tell you which one is actually winning, and why the answer is probably not the company everyone's talking about. Let's start with Devin. If you haven't heard of Cognition AI, here's the pitch. They launched in March 2024 with a demo video showing an AI that could take a task description, a Jira ticket, a Slack message, plain English, and just build the software. No hand-holding, no back and forth. Plan it, write it, test it, deploy it. Pull request filed, done. Half of developer Twitter called it a staged demo. The other half called it the beginning of the end. Both camps, honestly, kind of missed the point. Because while people were arguing about the demo, Goldman Sachs, Mercedes-Benz, NASA, the U.S. Army, and the U.S. Navy were quietly running pilots and renewing them. Annualized revenue at Cognition went from $37 million in May 2025 to $492 million in May 2026. That's a 13x increase in 12 months. Palantir doesn't grow 13x. Cloudflare doesn't grow 13x. Almost nothing in the history of enterprise software grows 13x in a single year. On May 27, 2026, Cognition closed a Series D, over $1 billion, led by Lux Capital, General Catalyst, and 8VC, with Peter Thiel's Founders Fund along for the ride. Post-money valuation, $26 billion. That's more than double the $10.2 billion they were worth just 8 months earlier. And that 89% figure. Let me land that properly. In December 2025, Devin wrote 13% of Cognition's internal code. By May 2026, it was 89%. That's not a tool anymore. That's your engineering org. Now, here's where it gets crazy. At the exact same moment, Cognition is raising $1 billion to stay independent. The biggest acquisition in the history of venture-backed startups just happened. SpaceX, yes, the rocket company, bought Cursor for $60 billion. All stock. No cash. The largest VC-backed startup acquisition ever recorded. Cursor, for context, is the other AI coding juggernaut. Built by AnySphere, 4 MIT classmates founded it in 2022. By November 2025, it had crossed $1 billion in annualized revenue. By June 2026, it was generating roughly $4 billion in annualized revenue, with about $2.6 billion of that from enterprise B2B customers. It reportedly runs on developer machines at roughly half of Fortune 500 companies. So why would a company with $4 billion in revenue, deployed at half the Fortune 500, sell itself? Especially when it was reportedly closing a $2 billion funding round at a $50 billion valuation. Here's the dirty secret TechCrunch surfaced. That $2 billion raise wasn't going to be enough to get Cursor to break even. The company was growing at a velocity that was burning cash faster than it could print it. Model costs. Infrastructure. The AI coding market is a margin trap. You're buying compute from Anthropic and OpenAI and reselling it as a product. And those guys can undercut you anytime they want, which, by the way, they're both actively trying to do. SpaceX first approached AnySphere back in April 2026, before its IPO, with a take-it-or-leave-it structure, $60 billion in stock to acquire, or $10 billion just to walk away. Then SpaceX went public on June 12th, raising $75 billion in the largest IPO in financial history. 4 days later, they exercised the option. Cursor became SpaceX property. And here's the genius move that nobody's really talking about. SpaceX paid in stock, not cash. When your market cap just hit $2.7 trillion, you can buy a $60 billion company for about 3.4% dilution. That's not a $60 billion deal. That's a rounding error on a balance sheet the size of a small country's GDP. SpaceX used its freshly minted IPO shares like a credit card with infinite limit. The strategic logic is obvious. SpaceX merged with xAI, Elon Musk's AI lab, earlier this year. But xAI's Grok coding tools? They were losing market share. According to corporate spending data from Ramp, Cursor's market share in AI coding had actually slipped from 41% in June 2025 to about 26% by May 2026. It was still huge, but it was declining. SpaceX basically bought a market position they couldn't build fast enough on their own. So now you have the two biggest players in autonomous coding pulling in opposite directions. Cognition took the billion, stayed independent, and declared itself the Switzerland of AI coding, working with whatever foundation model performs best. SpaceX swallowed Cursor whole and is already jointly training a new proprietary model on xAI's Colossus supercomputer in Memphis. Which means the next war in AI coding isn't about features, it's about who controls the underlying model. Because right now, Cursor runs on Anthropic and OpenAI models. SpaceX just bought it specifically to change that. Here's my honest, slightly contrarian take. And this is the part I promised you at the start. Everyone is watching Cognition versus Cursor. That's the wrong fight to watch. The valuation math tells a deeper story. Cognition is priced at 53 times revenue, 53. Public SaaS companies trade at 8 to 15 times. That isn't a software multiple. One analyst put it perfectly. It's a labor displacement multiple. Investors aren't pricing what Devin earns today. They're pricing what a full-time autonomous software engineer is worth versus a human one who costs $250,000 a year fully loaded. If Devin can genuinely replace most of that, the addressable market isn't the $12.8 billion AI coding tools market. It's a slice of the entire $600 billion global software development market. But here's what actually bugs me. Cognition's last published benchmark score for Devin on SWE Bench, the standard test for AI coding agents, sits at 13.86%. Competitors are reporting 50 to 70%. That is a massive gap. They have $492 million in revenue and a $26 billion valuation, and they haven't updated that number. That's either because the benchmark is outdated and Devin has lapped everyone, or because the revenue is partly coming from the Windsurf product they acquired, a traditional IDE assistant, not an autonomous agent, rather than pure Devin usage. That question is worth $20 billion of that valuation. Watch for whether they publish a new benchmark before year-end. If they don't, that silence is your answer. For your money and your job, here's what this actually means right now. If you're a software engineer, junior or mid-level, the companies writing your salary checks are looking at these numbers and doing the math. Over 100,000 tech jobs have already been cut in 2026, many directly attributed to AI automation. This is not a future problem. It is a right-now problem. The developers who survive and thrive are going to be the ones who treat these tools as force multipliers rather than threats, using Devin or Cursor to ship 10 times the work, not competing with them for the same output. And if you're watching this from an investment perspective, the real winner here might not be either company. The model providers, Anthropic, OpenAI, are the picks and shovels play. Every coding agent running on their APIs, every new enterprise deployment, every Cursor session pays their inference bill. And then SpaceX is trying to cut that cord entirely with a proprietary model. If they succeed, it's brutal for Anthropic's fastest-growing revenue line. If they fail, it's $60 billion of very expensive stock that bought a declining market share position. So, the company almost nobody is watching closely enough. It's the one that gets paid whether Devin wins or cursor wins. The AI lab's at the foundation layer. They're already collecting rent from both sides of this war. And when the smoke clears, that's almost always where the real money